You might think it a bit of a surprise for the Bank of England to be talking about some of these issues, but actually it's at the heart of what we do. Climate scientists have been clear for many years now that the levels of carbon in our atmosphere are unprecedented, that global average temperatures are increasing, and sea levels are continuing to rise. What we have also been clear about at the Bank of England, though, is that climate change is not just an issue for governments and the environment, but it's one that has significant financial consequences that arise from the physical impacts of climate change, whether they're hurricanes, floods, or droughts, but also the transition to a zero carbon economy. Climate change, therefore, matters for our objectives as a central bank. These financial risks from climate change are distinctive, and they require a different approach if we are to manage them effectively. First, these risks are far-reaching in their breadth and in their scope. They will affect all customers, all geographies, all industries. Their impact will be correlated. The effects will be non-linear. Together, that means that these challenges, these risks are likely to occur on a much greater scale than other types of risks. Secondly, these risks are eminently foreseeable. I can't tell you now exactly what will happen and when, a bit like I couldn't tell you what happens with the B word. But what I can say, as this chart of possible carbon pathways highlights, with a high degree of certainty that we will face some risk. Either we carry on our current trajectory of carbon emissions and we will see the physical effects of climate change, or we start to change that trajectory of carbon emissions, and in which case we see the transition risks. In all states of the world, we need to address risk, we just don't know which one. And then third, and for us at the Bank of England, this is the most important, the size of those future risks depends on the actions that we take today. If we are to minimize our future financial risks, we need an early and an orderly transition. And again, as this chart highlights, if we want that early, orderly and transition, we need to bend the carbon curve now. If we wait for the risks to materialize, it will be too late for us to act. Now, let me be clear, it's the real economy that needs to act, that needs to change. But the financial system, as Susan and others have already outlined, has got a core role to play in accelerating that change. As I said, the financial risk from climate change will be minimized in an early and orderly transition. And through the decisions on where and how to allocate capital, the financial system can pull forward such a transition so that financial institutions are ahead of and in control of the transition, directing capital to those firms that are resilient to the transition and avoiding investing in those that are not. This need to transition to a zero carbon economy is an economy-wide transition. It affects transport, it affects real estate, it affects agriculture, it affects infrastructure. It is not just the energy sector. And speaking personally, therefore, I can't see that we'll be able to disinvest our way to a zero carbon economy. It's a much bigger challenge than that. So, what have we done at the Bank of England in response to these challenges? First, we've raised awareness of these issues. Governor Carney first spoke about them in 2015, got himself into trouble for pushing the boundaries of central banking as he did so. But now there is a recognition that these issues bring financial risks. Second, we have surveyed the banks and insurers that we supervise to judge how good a job they are doing in managing this risk. Thirdly, and reflecting the fact that in that survey, we found that only 10% of the firms we surveyed were taking a strategic approach to managing this risk, we became the first regulator in the world to issue supervisory expectations that are designed to deliver a comprehensive, forward-looking, strategic approach to managing these risks from the firms that we supervise. The aim is for there to be a board-level discussion considering how decisions today can be changed in respect of the future financial risks that they create. And then fourth, recognizing that approaches to managing these risks are immature, and so we need to support the development of best practice. We've established the Climate Financial Risk Forum to share experience and build capacity. But there's much more to do too. Firstly, we're planning to work with firms to enhance, indeed try and transform their approach to managing these risks by identifying best practice and embedding that in our supervisory requirements. Secondly, disclosure is critical if the financial system is to be able to weigh risks and direct its investments in the right way. We have therefore been clear that we expect listed firms and major investors to disclose in line with the international standards set out by the FSB's Taskforce on Climate-Related Financial Disclosures by 2022. Third, we have said that we will undertake a stress test of the UK financial system to help us better size this risk. This is a complex exercise, so we'll be consulting on how to go about doing that later this autumn. And I hope that our approach that we described there will be valuable not just to the banks and the insurers that we directly supervise, but to the financial system more broadly. And then finally, we're leading the way with our own actions, including through disclosing our own approach to managing risks in line with the TCFD in our next annual report. So capital needs to be grounded in risk. What I've just described is designed to size this risk as we look ahead. Capital requirements have typically been set through the rear view mirror. We've looked at what risk has materialized in the past. By definition, this risk is a forward-looking risk. And I think that we will be better able to answer the question about what should the capital requirements be once we've done this job of sizing the future risks that we take. That's a natural consequence of the work that we are doing.
Gary, could I perhaps ask you to come in first? I'm sure you must be tired of people referring to economics as a dismal science. Yesterday, there was a round table where we looked at some of these issues, and you were incredibly optimistic, I felt, at least from a Scottish perspective. So perhaps could you build on some of the points that Sarah's made and Susan talked about in her keynote address, but perhaps put that in a more specific Scottish context for us?
Okay, thanks very much. It's a pleasure to be here and speak. So I think I would like to give you a perspective of government and how government views these issues. So I think as Sarah, Susan and other speakers have said, we live in an unprecedented time of change, both political, technological, economic, environment, and socially. And then essentially what we're talking about is system change. We need to think about, as Dame Susan described, the three legs of the stool. For us in government, that's economic, social, and environmental. And that any change that we have can be driven across those three pillars. I wanted to say a little bit about the approach to government in Scotland, which links to the SDGs and is rooted in a framework based on a national performance framework, which essentially is an outcomes-based framework. It was introduced in Scotland in 2007, and essentially it recognises that to achieve outcomes, you have to drive the whole system. The outcomes are interdependent on each other, and that it takes a different form of government. It takes a different type of approach. So that's very much embedded in Scotland. It was introduced in 2007, and I'll say how it's developed over that period very, very briefly. But essentially, the 11 outcomes that are there are linked to the SDGs. So if you like, it reflects Scotland's national plan to achieve the SDGs. It has a purpose at its centre, which is a strategic direction, and that reflects essentially the purpose is about the well-being of Scotland, both social, environmental and economic. Also, which I think is really important in thinking about climate change also, it also has a bit describes what type of society you want to be. And within that, it recognises the rule of law. When we were doing this exercise, we consulted across all of Scotland, and the thing that people came back with, what was the most important for citizens of Scotland, it was how they were treated. So at the heart of it, there's something about a society which treats people with kindness and dignity. Let me come on to the economic approach now, and I'll say a little bit about Scotland's approach to climate change as well. So essentially, when we were relaunching our national performance framework last year in 2018, the First Minister at the launch said essentially that GDP and growth was an end to a means. So essentially it was only important in the extent to which it enhanced their environment or supported improvements in the quality of life or enhanced opportunity. So from early on in this government's approach, there's been very much looking at the pillars of economic opportunity, reducing inequality and sustaining the environment. The approach the Scottish Government have placed on the environment now is, as people have said, is recognised internationally, commitments to net zero by 2045. In the most recent programme for government, we're looking at a 3 billion green investment portfolio, commitments to decarbonise fully our electric network by 2035, investment in public transport, bus priority lanes, looking at a pilot scheme in the Highlands and Islands for electric planes, climate change emergency skills plan, alongside a host of other initiatives around regulations, around buildings, houses, everything to manage the transition, because this is a whole system change that we will have to put in place. So it's really important that we recognise essentially what we're doing is we're talking about system change. On the economy, we've been in that space for a number of years. Policies such as inclusive growth, fair work, the business pledge, childcare, gender equality are all about trying to change the system. And what we recognise is we can't change one part of the system in isolation of the other parts. So business has a crucial role. The financial system has a massive role in this.
Gary could have introduced the Scottish National Performance Framework and sort of broadened beyond looking at environment and the climate, talking about social and economic well-being too. I know that you're kind of keen to pick up on the sort of some of the other SDGs as well, particularly looking at issues of financial inclusion in a Nigerian and wider African context. But also, could I ask you both, are we perhaps seeing this through something of a privileged sort of European lens as well? Is there a different perspective, a more global perspective we need to look at this through?
Thank you, and it's a privilege to be here today. Let me step back and make the point that if you look at the stage of development in most African countries today, what is most paramount for us is around inclusive growth. I haven't said that climate is not very important, and I'll come to that shortly. Globally, 4 of the 10 fastest growing economy in the world, they are in Africa. And we are privileged that our principal head office is in Nigeria, which is the largest economy in Nigeria. By far, Nigeria is also the country in Africa with the largest population. The issue has always been, how do you orchestrate an inclusive growth? And that is where an institution like ourselves, we've been in the forefront of promoting financial inclusion. By the way, we see financial inclusion in a much broader sense. And financial inclusion is at least central to our ability as a country and as a continent to achieve at least 8 of the Sustainable Development Goals. What have we done? If you step back about 4 or 5 years back, the critical issue across the continent is lack of access to financial services. And when people do not have access to financial services, then how the millennium goes around addressing poverty, addressing hunger, providing health and well-being becomes a challenge. So institutions like ourselves, also spearheaded by the central bank, came out with guidelines designed to stimulate interest in terms of getting more people into the banking space. If I use First Bank, where I'm the CEO as an example, we have products, we have specific offerings targeted at people at the base of the pyramid. And I would say we've been relatively successful. Today, First Bank across Nigeria, we have over 35,000 agents across the nooks and crannies of Nigeria providing financial services products, micro-lending, micro-pension to various people over and above offering basic financial services. We've also utilized technology making use of the quick code called USSD, that's the unstructured supplementary service data, to reach population at the base of the pyramid. We started that about 4 years ago, and today we have close to about 9 million people who are actively transacting on that platform. Indeed, end of August was a landmark date for us because we celebrated the fact that we have processed over 2 trillion transactions on that particular network, and that's significant.
In business in general, particularly the larger the organization, we tend to put things in boxes. And so for some of the issues we're talking about just now, they initially, I think Omar said, belonged with the PR department and then went into a CSR team. And then perhaps there's a department somewhere that deals with green finance or whatever. But actually what needs to happen in our organizations is that these issues become totally core, totally mainstream. We can't just assume that they're compartmentalized. Another thing that worries me is that particularly in finance, we deal in numbers. We deal in abstractions. That's what our products are. That's what we talk about. That's what capital is. It is removed from reality in some respects. And we don't think about this, but that's what we do. I once said to an entire audience of accountants that numbers are just one interpretation of reality. And the gasp was audible around the audience. But that's all numbers are. They're an interpretation of something. And if we could all learn to bring those back into the world of the real economy, as you call it, back into reality, I think that would help. The other thing that I worry about is we think problems are someone else's problems. So I was really pleased to hear you start off by talking about financial inclusion. That's a sphere and a place that I've spent a lot of my career working on, both in the US and in this country. And, that isn't a problem in the continent of Africa. It's not a problem somewhere else. These are problems all over, and they need to be addressed all over. So I think this probably doesn't answer your question, Simon, but that's typical of me. But I think what we need to do is all of us understand that these are not separable, isolated issues, challenges that are for someone else, that we all have to think about them, learn about them, speak up about them, and have the courage in our jobs day in and day out to talk about them. That's what we can do as individuals and in our institutions.
Thank you, Susan, for that intervention. The way we've always looked at it is exactly that. If you set this up as a separate function or you allow it to reside somewhere, then it gets lost. It becomes tangential to your business rather than it being an integral and a core part of your business. So what we've done, the way we've looked at it, whether it is financial inclusion, whether it's paying attention to the environment, irrespective of what we are doing, what we've done is that we've embedded those key policies, the key themes, they were integral part of our business strategy. When you mainstream them, what it does for you is that the entire institution is galvanized behind it rather than leaving it to maybe a small team of people. What is important, which Susan also dwelled on, is especially in the emerging market and developing country, when you don't have inclusive growth, when a significant chunk of the population is left behind, there's actually no way that the economy can reach its full potential. Coincidentally, there's a conference that started yesterday in the federal capital in Nigeria. We call it Nigeria Economy Summit Group, and the President of the Republic was there. And he said his commitment is to have policies and projects that will take at least 100 million people in Nigeria out of poverty. And again, he referenced this Sustainable Development Millennium Goal as the anchor through which this should be achieved. So it's not just about policy, it's about an holistic approach to dealing with issues that confront all of us all over the world. Maybe when you look at the spectrum, it probably varies across region, but broadly speaking, it's a pervasive problem globally.
At the conference I was speaking at last week at the OECD, the Secretary General mentioned that within the OECD countries, which are regarded as the more wealthy countries, 40% of the population were within 3 months of falling into poverty. So even within the most advanced economies, there is still real challenges around inequality, the security of employment, and so this has to be managed in a way that can kind of bring all that together.